Wall Street is bracing for an IPO tidal wave. Lyft, Pinterest, Uber, Airbnb, all getting ready to go public in the next few months. Lyft will start trading later this week at the NASDAQ. And if you guessed it, oh, there's an ETF for that too. There's several. The Renaissance IPO ETF, which tracks newly public U.S. companies, up more than 30% so far this year. It's making it one of the best performers in the U.S. ETF market. Can that win streak continue? Let's talk to the person in charge of it, Kathleen Smith from Renaissance Capital. She runs that IPO and advises clients on IPO activity. You must be pretty happy, up 32% so far this year?
We're very happy. That means alpha for our product, and we've had very strong alpha, not just so far this year, but the last several years.
You and I have known each other for a long time, and one of the things I always like about you is you look out for the people who are our viewers, the people who are going to buy this stuff after it starts trading. And you're delighted the IPO market is opening up. You've been saying that, but you've got a lot of concerns about valuations.
Well, we're always on the buy side, so we care about whether we can make money on these IPOs, and there's a huge crowd of cheerleaders on the sell side. So those voices are very loud, so we look at it and say, can investors make money? And we have a very big list of large companies coming out, notably Lyft at the end of this week, that's put a $23 billion valuation on a company that's losing $1 billion. So a real challenge for the marketplace to absorb these kinds of companies, both the amount and also the valuations that we're seeing.
Well, this goes to this question. 230 companies ready to go public. These are your numbers that I'm using this year. That's an awesome tidal wave. I guess the question is very simple. Is there enough people to buy all of this stuff out there, or are prices going to have to come down?
Well, clearly the IPO market now, as opposed to the internet bubble, is much more institutional. So we're expecting the price discovery to be pretty good compared to what it was in the bubble period. And it means that big institutions are going to control the ownership early on of these companies. So individual investors or smaller institutional investors will have to find sort of other ways, and will have to find a time in post-IPO trading to purchase these and put them into their portfolio.
Marianne, it's finally happening. We've been talking about these unicorns for years and years. Finally, it's happening this year. So this is good news. But valuations do concern me. Look what happened last week with Levi, up 30% the first day. Lyft, $15 billion, the last round of funding. They're talking about $22 billion. What was Uber, 78 billion, Kathleen? And they're talking about, the word is out, they want to try to get 120 billion. Does that concern you at all?
Well, I've always put IPOs in the sentiment category because I used to be a technician. And at least at the moment today, we don't see an IPO excess. Some of the things that you're talking about are potential excesses, but they haven't happened yet. So until they happen, right now the IPO market, when I look at it from a sentiment indicator, is still very positive for the market.
Are you surprised there's not more ETF activity around this, or is this because it's so small?
I think it's a small market, and I think it's tough to run a fund as concentrated as Kathleen's here. If you look at some of the competitors in this space, they're holding companies for 5-6 years. Those don't feel like IPOs to me. The methodology behind Kathleen's fund is really tight. They buy early, they hold for a little while, but when these companies age out, they age out. So you're buying real IPO exposure. That's tough to do.
Kathleen, give us 20 seconds on how your fund operates. Basically, you own roughly the last 60 large IPOs. You'll only hold them for 2 years. Explain how it works.
It's a rolling 2-year population of the largest and most liquid IPOs, rebalanced every quarter. But for very large companies, they'll come in pretty soon after the IPO starts trading. So large ones like Lyft, Uber, all be constituents on a fast entry basis into our index. And the important thing is that other products do not include. We are the first ETF to own these new companies. There are no other ETFs that are picking them up so early. So if you invest in the S&P 500, that index took 2 years to own Facebook. So it is a way to put in a sleeve.
And you owned it after how long?
Oh, as soon as within a week of its IPO. Yeah.
I should note there is a competitor product out there, First Trust Opportunities, but they hold it for 4 years, not 2 years.
On average, they can hold as long as 6. And what you end up with is a very diluted portfolio. It's not that that's a bad fund. It's just a very different approach to the new company space.
Yeah. And Kathleen, let's go out 3 months from now. So we've got 60, 70, 80 companies that have already gone public. This first wave is going to do well. Lyft's going to do well. We know that. Levi's did well. Do you think we're still going to see these prices hold up 3, 4, 5 months ago when we start getting the real meat of the IPO business?
I think a very important test is going to be how the market reacts to these money-losing ones. Lyft, Uber, Pinterest is coming out. How are they going to be priced and traded? That'll tell us how long we have that this can go. We knew that our ETF, as it performed so well this year, meant the window's opening for IPOs. We know from our studies, the early ones out are always the better performers for investors. The length of time will be the reasonableness of the valuations.
Well, at least it's finally happening. After 10 years of private equity sitting on these
The
things,
dam is open.
they finally decided to let it go, and I, for one, I couldn't be happier. I do share your valuation concerns, Kathleen. That does it for this week's ETF Edge. I'm Bob Pisani. My thanks to my friends Marianne, Dave, and Kathy for joining us today, and thank you for watching. You can find all of our latest videos right here on our website, etfedge.cnbc.com. We'll see you next Monday, same time, same place. Have a good week.